You are looking live at a daily chart of the Nasdaq, which was up 15 points today, or 0.08% on about average 50 daily volume here. Just got to point out, what's really going on in the market and not what we think is going on. That's what I try to do every day and try to show you, what's moving. And I just got to point out today the Nasdaq. Well, yesterday the Nasdaq was down 280 points. Okay, and this is what I call a whack day. It got whacked, right? Down to the 21. And when it gets hit like that, you want to see it get half of that 280 points back, 278, 279. We'll call it 280. So you wanted a 140 point bounce off that 21. Okay, it got whacked down to the 21. You want to see it bounce right up, but it didn't. It traded up to its 10 here and kind of stalled. Like I said, it was only up 14 points in a very tight day today, tight daily range. And you could see that the bounce off the 21 did not give half of that 280 back. We wanted 140 when we got 15. So what I'm expecting now is, in the next couple of days, you got to be a little patient here. Maybe it'll bounce tomorrow, maybe it'll bounce Friday, but I want to see it trade, bounce first of all off this 21 and not slice below, because it certainly could slice below. So it's kind of like at an inflection point right here. We just started a power trend. I expected this thing to power higher, but if it slices the 21 and wants to come down to this, 50 here, that's going to be quite a bit of pain because it's a couple of percent at least on the Nasdaq. So what I'm looking for here is it didn't bounce today, but maybe tomorrow we'll get half that back from the 280, we get 140, 150 point move tomorrow or Friday. It's got to happen pretty soon, though. And if it slices the 21, I become a little more defensive here. Yeah, that day yesterday was quite a hatchet job. It was a whack, and it didn't bounce today. So I'm very disappointed in that move. Bigger picture, if you just kind of take a look at what this thing is doing here, you can say this is looking like, a cup with handle here with a little bull wedge, which is definitely plausible. Digesting these gains here with a little move here, that's plausible as well. But I need to see a bounce off the 21. I'm sorry. If you're from Missouri, you got to show me, right? So the Nasdaq did not show us today with a lousy 15 points. It could have been worse. Could have gone down another 280, and that would have been fine because then we don't know yet what direction it wants to go. If it would have gone down another 280, then right? So just kind of waiting and seeing here today. It closed 2.8% above its 50 and just 0.7% above the 21. So yeah, it's not much of a bounce. Like I said, you don't want to take that 2.8% trip down to the 50. That would be kind of painful. So this thing's got work to do. It's got to show me. The Dow Jones Industrial Average was up today, 40 points. It didn't get whacked like the Nasdaq did yesterday. It just pulled back to its 10 and bounced a little bit. Not a real big bounce, but it didn't come back that much. It was down 173, or less than 0.5% yesterday. So yeah, up 0.9% today. Definitely a strong index though. SPY undercut the 10 yesterday and closed right at it today. You can see right there if I zoom in the green EMA 10, 568.79, 0.0%. So it's right there at its 10 EMA. Let's bounce tomorrow, folks. Come on, man. Let's get this show on the road. And this is the IWM, the Russell, and you could say this looks kind of like a little bit of a bull wedge as well here, and maybe it'll bounce off its 21. So I think the Nasdaq and the Russell have work to do. That closed right at its 21. So anyway, um, like I said, we're gonna be like Ross Perot, and we're gonna take a look what's under the hood was what you got to do. It is political season, and Ross Perot was a character, and he liked to look under the hood. And I think that's what you have to do with the indexes here. Obviously, the Mag 7 moved these big stocks, move the indexes. You know, this Apple's in the Dow, the SPY, the Nasdaq. It's a huge player, you know, the largest market cap stock. It's been going, you know, up and down here, trading sideways on these reports of the iPhone 16, and we're just not going to know until they report earnings on the 24th, and even then you don't really know. You know, unless they divulge that information, which I doubt that they do, but you know, they're going to report sales, and hopefully they'll talk about the demand for iPhone 16. And this is only what, 3 weeks away, 22 days away. So today is October 2nd. So anyway, did I say thank you, and thank you for watching my daily review? And today is October 2nd. Thank you for watching my daily review. This is Microsoft, just consolidating in a base. Another one of these like wedge patterns. The problem with this, you know, cup with handle wedge patterns, it's starting to, you know, pull back a little too much. It's back to the 50 and undercutting the 50 here. So we need to see a bounce with Microsoft here today. It was down nearly a whole percent and close just a tick below the 50. So looking for a bounce there. NVIDIA, doing a whole lot of nothing. Another one of these little wedge patterns. We're seeing a lot of this because the index pulled back. So you're seeing a lot of this wedge pattern. They need to bounce. You know, they need to bounce. I get it. You know, digesting these gains still within a, you know, consolidation period after the, you know, the big run up. Now it consolidates, right? So there's nothing wrong with this, but it's just, you know, if you're trying to make money in stocks like on a daily basis, this is kind of dead money. So it's just consolidating gains. You can see it up after hours. Jensen was on, he was doing an interview with the Accenture, talking about the Accenture deal. And you know, I'll get more into that tomorrow morning. But Jensen's definitely a good PR guy. All right, moving on. Amazon, some of the more Mag 7 names. I'm going to go through Amazon. You know, same thing like this wedge pattern, just a pullback to the 21, much like the index. It needs to bounce here. This is, you know, needs to bounce. We need to see some action here. And it's just not doing it. Google looks like it had an inside day, just a quiet day after, you know, nice little run up from the bottom from 147. That looks fine. And then Tesla reported deliveries today. Street, you know, sold off at first. You could see the, you know, initial reaction, knee-jerk reaction, sell everything, and then it ramps up. It just kind of traded flat into the close. The deliveries are fine. Tesla stock looks fine. It just pulled back to the 21, and this one actually bounced. That's, you know, even though it was you know, red today, you'd call that a pink rally day, right? Yeah, it closed it, you know, nearly 80%, you know, in the upper quartile of its daily range. So not a bad day for a Tesla, even though it was down 3.5%. It found support and bounced. And the last one is Meta Platforms. This is probably the strongest of the Mag 7 names. And yeah, just it's had big gains, so digesting big gains here. Anyway, I'm going to move on to because you know, there's some hardware names that I'm interested in, but I'm just watching them at this point, and this is what I'm talking about here. This wedge pattern from Broadcom. It pulled back to its 21 yesterday. I mentioned that. Wanted to see a bounce. It bounced 2% today. If we take a look at the 5-minute chart, you can see a nice rip in the morning and just kind of sold off into the close. But you know, you want to see a bounce, and it gave you a nice little bounce today. Arm's not looking all that great, but same pattern here, pulling back to the 50 and forming this little wedge pattern, right? So these things need to bounce. So it's telling me we're either going to bounce here pretty soon or we're going to sell off. I don't think this is just going to continue to do this. Micron reported last week, and I told you that I do not like stocks that go below their gaps. It's in the gap zone. So what does it do when it's in its gap zone? Well, it wants to close that gap. 107.53 was the low on the gap day, and now the last 4 days. Yeah, I know it's in lighter volume, but you're still losing money. And I just, you know, if it comes down to the 96.18, you know, below, that would be below the 50 here, right? Yeah, 97.19 is a 50, but if it pulls back and fills that gap and bounces, then that might be a place to get in, but it's below 100 here, and I just don't like stocks that gap up and then close below gap day. That's a non-starter for me. It's adios muchachos. The Seagate, I like this pattern here. Once again, we have this little wedge, right? Run up, and then the last 4 or 5 sessions, just forming this little wedge as it pulls back to the 10. I expect a bounce here from Seagate. I would actually put that on my ready list if I was more confident in the market right now. But like I say, you're from Missouri, you got to show me. Allow the markets to prove themselves. Don't assume that they're just going to go higher. You got to wait for the bounce, and that one didn't bounce. So, ANET, another one of these stocks that I like. This is in the networking area, but kind of the same thing here, just wedging back, lighter volume, way below average volume. Today was 40% below average, pulling back to the 10. It did bounce 2% today. So ANET, it's got that 376, call it 377 here, and it bounced off that. So that ANET looks pretty good. Anyway, I'm gonna move on. The China stocks. I got to talk about the China stocks. I'm going to start with AT, not AT&T, AT. Hotel operator. This one's just been popping like the rest of the China stocks, up 6% today. And this one, unlike the others, it closed near its high, and that's what you want to see. This high volume close is it ramped into the close. Yeah, I like that. A lot of the other China stocks didn't. Yeah, they gapped up and then they sold off and then flattened out. This one all day long, so that looks pretty good. But to me, Mick Jagger saying if you're playing with fire here, I think with these China stocks because they've gone up so far so fast that just a little bit of profit taking. If you're trying to nibble on these now, there's a good chance that there's some profit taking. FUTU could certainly come back to $100. This is what I'm talking about here. The gap higher in the morning, and you get the old okey doke, right? And what does it do? It sells off and then just flattens out the rest of the day. So if you bought up there, if you're an eager beaver, which I totally discourage being an eager, 127 was the open, and then close at what, 112. So you're $15 in underwater if you're trying to be an eager beaver and jump into this water too quickly. That's why I'm saying Mick Jagger's saying if you play with me, you're playing with fire. And JD, I like JD, and I got to go to the weekly to show you why, is because this is just a stage one breakout. I know it was up a lot last week, but this is not like abnormal behavior. I mean, if you just didn't know the ticker or anything, if this is a software name or NVIDIA, you'd say, hey, this one just, broke out of a stage one base. It was up, 40% last week, and now it's up, 12% this week. So this has got a lot of momentum, a lot of power. It's got a lot of volume here, even through 3 sessions. Look at this weekly volume. So very impressive move for JD. So that's one of the ones that I like. And same with BEKE. Because this one was near a buy point. Once again, you got to look at the weekly on these to get, before you go too crazy. This one's got a blue dot. Look at the volume here for 3 days on BEKE. So if I was going to play these, and these are the couple that I like. I mean, obviously there's a lot of them, but it was up 40% last week and now another 23% gain. So, you are playing with fire. The reason why I like this one because it pulled back. I forget what day was it, Monday? Yeah, Monday. It pulled back to that old buy point. So not many of them are trading near buy points. This one was, and now it's extended, beyond its buy point. And how far above its 10 EMA is this one? Like 40% or something. Only 25%, not bad. All right, like I said, you're just playing with fire. FXI, once again, an ETF is a great way to play this. And this one broke out of a stage one base last week and is tacked on 10%. Not bad for a exchange traded fund. Anyway, I'm gonna, I have a lot to cover, and I think, I've covered this for the last 2 weeks. So I'm gonna move on to something that I really like, VST, the top performing stock in the S&P 500 this year. That's right, more than NVIDIA. And this one just, it looks to me like on the daily chart, just a breakout and it just wants to surf the moving averages higher now. How high? I don't know. I would expect from that 102, no, excuse me, 107.24 about a 20% move there. So I think this is going to go up to about 130 before forming a base. I could be wrong. It could just continue to move higher, or it could just base right now or pull back to its 10. But it looks to me like its character just wants to kind of surf the moving averages. So just watch the 10. It's going straight up. We got this one when it traded above the uh downtrend line. Then I sold a little bit on this day when it pulled back slightly, because I get nervous. Like, hey, I want to take some profits and buy some golf clubs or something. And it just formed this little shelf pattern. And then Monday, Tuesday, Wednesday has been a nice week for this one. So let's take a look at the weekly chart on VST. Yeah, it's up 6.5% this week, following that breakout from the downtrend line last or 2 weeks ago. 2 weeks ago, when it broke above that downtrend line, it was at 22%. Last week, 9%. And this week, tacked on 6.5%. You can see that pretty pronounced move here from that downtrend line. It tacks that line about 4 times. So a legitimate line is 3. And this has got 4 touches of the line. So Vistra has just got a lot of power. You can see the group is, 7 out of 197, very strong groups. And people always want to know, what do you think? Where's it going? It's broken out. Now, what do you think? Well, I think, this is not Aunt Sally buying the stock. So I think it's going to continue higher. Most stocks, when they break out of a base, they rallied 20% before, forming another base. And I don't see why this would be any different. So I'm calling 130, just being conservative, maybe 135, maybe 140, who knows? I just watch it day by day. And that is my largest holding now. My second largest holding is VRT. Once again, broke above the downtrend line, ran up, and then I sold it like a little Chicken Little when it started forming this little, this bull wedge pattern. This is what I'm talking about here. We're seeing a lot of this lately. Pulled back to its 10, and that's the kind of bounce you want to see. Darn it. That's what I want to see from the Nasdaq. Not a 5% move, but just a bounce with conviction. And that's what Vertiv Holdings gave us today. And that's the kind of bounce you want to see in a stock, not these little weakling bounces, that need to go to the gym and start lifting some weights. You need some power moves higher. And that's what Vertiv gave us today. And let's take a look at the weekly chart, because this will show it a little better. Yeah, you can see this pronounced cup, nice base. You can see, 19, 20 weeks here. And it's been a long time since it's done this. Let me go to the daily here. Vertiv has not done this since May 26th of 2023. So it's been a year and a half, since it made this massive run, then formed this base. So, Wall Street likes this, and you can see these big blue volume bars. So this is not, Aunt Sally buying. This is, this is Wall Street. This is institutions. They like this stock. They're the ones that move the needle. They're the ones that are driving this stock higher. And Vertiv, I got a lot of questions on Vertiv today, and it's like, hey, I didn't have it on my radar list. Sorry, folks. I had it here at 83. I didn't have it here at 100, but I like it above 100. I don't like it below 100. So I'm going to put this on the ready list tomorrow. And as long as it's above 100, it's all go. But you can see last time it ticked above 100 and pulled back to the moving average. Now it moves up again. So what's it going to do? We're going to find out. But yeah, if you're paying 100 and, if it's above 100, I like it. If it's below, just keep it simple. And I think longer term, it all depends on your objectives, your goals, and your time frames. If you're a longer term holder, I think this is going to go much higher. They report earnings in 21 days, so 3 weeks from today. All right, let's move on to some of these other names here that are in this, data center, electrical power group. This is Sterling Infrastructure. We've seen this before over and over again, this bull wedge pattern back to the 10, and it bounces. It didn't bounce like Vertiv, but still, you take a 2.2% bounce. This is a building heavy construction in number 20 out of 197 groups. And you can see it, broke higher for a couple weeks. Gosh, that's a tight little inside week last week, isn't it? My goodness. And didn't do a whole lot. but when it, comes straight up off the bottom, 17%, another 17%, comes back and gives back 3, and now moving up this week, 2%. So what I would like to see from sterling is, yeah, get above that high there of 152, please. But yeah, that's a nice bounce today on that pullback to a moving average. Power, or excuse me, Quanta Services. I call it power because of the ticker, but this looks so familiar, and we're seeing this in so many charts here. Pull back to the MA, and it didn't slice the MA, did it? No, it found support and bounced 1%. Not the type of bounce you really want to see, but it didn't slice the 10. So as long as it's above the 10, I kind of like it. Okay, POWL. This thing has been moving since Jerome Powell. So Powell Industries, since Jerome Powell spoke. This one, I got to look at the weekly on this because the daily is kind of choppy, but you can see the base on base pattern. The last 3 weeks just powering higher, and you can see the volume here, big volume bars. So, like once again, that's not Aunt Sally buying that stock. It's a 2.7 billion market cap stock, just trading higher. It looks a lot like Vistra, VST, where it just broke out and it just wants to run higher. And we're just going to keep our eye on that 10. And as long as the 10 is going higher and the stock's above the 10, guess what? You're making money. So, just sit tight. NEE, another one that we had on a regular list a while back there around 80. And this one's just surfing its moving averages like Kelly Slater. That's a thing of beauty. And in RG, another one that we had on a regular list maybe last week or the week before. And this one's just breaking higher. And once again, starting to surf its moving averages. So that's kind of what you want to see from this group. Anyway, I'm going to throw a curveball at you or a changeup. How about that? We got the baseball playoffs going. And curveball, yeah, no, changeup. Does this look familiar, folks? I mean, this is a pullback to the 10, and it found support. I did put this on my ready list today because I wanted some exposure, like shotgun exposure, right? Some software, some hardware, some defense, some oil and gas, some retail, some chemicals. You just throw a shotgun approach, and the rotation's going to hit you one day or another. So anyway, this is Kodiak Gas, oil and gas field services stock. The group has been weak, but this has been, one of the stalwarts in the group. So that's why I put it on. But you can see on the weekly chart, just base on base on base pattern. So it needs to break above. I want to see it break above that 30.52. So today it got to 30.22. It's a slower moving stock. This is not NVDA or VST. This is a slower moving stock, but if you want some exposure, you want some strength in the oil and gas group. Now this is AM Antero Midstream. I believe it was downgraded yesterday or the day before, but anyway, this week it's held up well once again. Same pattern, the bull wedge pattern as it pulled back to its 10 and then bounced. Let's take a look on the weekly at this one. Yeah, nice 3.6% bounce this week, and we'll take that. I mean, with the Nasdaq, kind of floundering this week, and the indexes, just pulling back, 3% move is pretty darn nice for your portfolio. All right, CNX, this one, once again, had this, bull wedge pattern, pulled back to a moving average, found support, now it's bounced higher, and I want to see what this one's done this week. This is an oil and gas exploration stock. Yeah, it's up 5% this week. So a nice move from CNX. So, look out for those wedges. And I'm not talking about a salad or a golf club. This is ExxonMobil, one of the, the leading, this is the top stock in the XLE. This is Chevron and Exxon. Got upgraded today with a lower price target. But anyway, you can see this one's kind of coming straight up from the bottom here, but still consolidating within a base. And I'm kind of intrigued with this here at $120. Right here, that 120.50. If let me see, yeah, 120.50 broke above that today. So Exxon, once again, a little slower mover, but it's getting some volume coming in, and I would say it performing well. All right, just want to show that one. GLNG. This is a transportation pipeline stock, definitely broke out from a standard buy point and showing strength, trading higher, up 3.6% this week. And this group, 80 out of 197, so a little stronger than some of the other integrated and field services group. Anyway, I'm going to move on because I want to show, I did mention defense, obviously with the Mideast tensions and shenanigans going on over there. The defense is going to be in play. And this is Curtis Wright up 4% this week. Let's take a look at the daily. Yeah, once again, I sound like a broken record, don't I? Just this bull wedge pattern, pull back to the 10 and bounce. Yeah, looks good. AV. I put this one on the ready list. This one had a nice bounce on Tuesday, so I expected a little bit of pullback today. I had mentioned that. Wait for the pullback here. It's just it was up 5.2% yesterday and gave back 3 of it today. Still above its 10, but it was still just an inside day. Thing I don't like about this, it closed at 2% of its daily range. Not so good for AVAV. GE looks pretty decent too. Once again, wedging back to its moving average, same pattern. You guys are probably getting sick of me saying this, but you want to see it bounce off that. GE hasn't done that. HWM, Howmet, excuse me, HWM, although I like waste management too. Pull back a couple of days to the 10 and then bounce now above 100. I like it above 100 and I don't like it below 100. And then FTAI, another defense name. So defense wins championships. And this one broke higher today, made a new high, closed at a high. So FTAI, the defense names are strong. If you didn't know anything about the news, you just say, hey, that's a pretty strong stock right there, making new highs. All right, I'm going to go quickly through the drug stocks. RNA, I had this on my ready list last week because it was trading, tight within a base, but kind of traded below its 50, didn't do anything. I took it off. It did make a new all-time high today, though. So I just wanted to point that out. ADMA, another one that I like, one of my favorites, and this is, or it is my favorite in the drug sector. And this one is doing what, folks? Kind of pinching in here as it pulls back to its 10 on light volume, way below the average. So I would expect that to pop above 20 pretty soon. CAPR, this one's ridiculous. Uh, it was up, 10% today and it still had an inside day. So pretty strong stock, had a heck of a move off the lows. I know people are, talking about the high tide flag with this one, but nothing tight about that. Yeah, no flag, just a pole. All right. And then LB, pH, you got to have pH in your drug stock. And this one, 40.48, pulled up to its standard buy point, then closed, at the lows of the session, but still a point of interest to me. Why? Because on Tuesday, it traded above that downtrend line here, and then now today pulled back, but definitely a stock I'm watching. That's Longboard Pharmaceuticals, and then LI. Yeah, man, this is in the medical, research equipment. This one, once again, had a nice pop today, but still near a buy point. You can see this stage 1 base here. So I want to see this one trade above, 137 and close above there and stay above there. And that's what it did today. So that's what I'm watching for that one. And then United Healthcare had some news today and just a strong stock, I believe. I believe it made a new high above 607.94 today, maybe not. Anyway, close to a new high, 604. No, it didn't, but still, you could see that once again, this wedging pattern back to a moving average. This happens to be the 50 and now popped higher. All right, moving on. A little bit of retail. I don't want to get too much into the retail. The retail is not doing all that great right now. Not many sectors did well today, but this one's near a buy point there of 41.25. Straight up from the bottom, just pointing that out. Usually when straight up from the bottom, they do this. And that's why the China stocks are being kind of abnormal because they're just going straight through and not seeing any profit taking. That's why I'm saying you're playing with fire with those, because if there are some profit takers, you're going to get pinched there. All right, this is Tractor Supply traded above that 290 buy point. Very nice move here from Tractor Supply. And the last one is Boot, another retailer. Boot, BOOT. That's how you spell Boot, Marty. All right, and this one just kind of like Vistra, broke out. Now it's trading higher and trying to allow the moving averages to catch up. But actually, this one's forming a shelf here. So if it can break out of that little shelf, that would be another additional or add-on buy point. All right, I'm going to skip some of these because for the sake of time. RPM reported a nice report today. Since Elliott Management's gotten involved with the RPM, it's really done really well. It just had this wedge action to the 21 and then, blasted higher, 6.3% on earnings. If you take a look at the weekly here, I think Elliott got in when it was kind of floundering down around here. I'd have to look again, but I think it was around 2022, the end of 2022. And since they've been in, I mean, that's a nice run for this is a slow moving stock. I misspoke yesterday. They've had three CEOs since 1947. Frank Sullivan, Tom Sullivan, and now Frank Sullivan Jr. How about that? Man, three CEOs, and I don't know, I can't even do the math on the years. 53 and 24 was 70 something years. So yeah, this is a dividend aristocrat, and I definitely like RPM just long term for retirement portfolio. You got to play all types, right? This is CF Industries, this is another chemical stock, making new highs today. So I just wanted to point that out. Another one that didn't report earnings, but they raised guidance is this telecom fiber optic stock. CIEN had popped nicely up with volume, which is what you want to see. That was their earnings report. Now they wait a couple weeks later, raise guidance once again. The bull wedge pattern back to the 10, and then the pop, and then its partner LITE. LIT, I'm having trouble spelling today. Once again, that wedge pattern, pull back to the 10, light volume, and then a nice pop here of 5.7%. And so that's a telecom fiber optic names that are, top 20, 25 group. So those look good. The last group that I'm going to cover, I think, if you're lucky, once again, this wedge pattern pull back after a nice move higher, little pullback to the 10 and pops higher. That's FIX. MOD is another one that I like in this group. Same profile, 3.36, 3.36 pop today after the pullback to the 10. We like that. Carrier, I explained the trade on Carrier from back in July, August, where it sold off below the 50, then rallied through and had that old buy point there at 66.50. So if you were flexible enough to get in, it did pull back to its 50, but man, had a nice run. Now it's just forming this shelf. And guess what? Little wedge pattern back to the 10. Yeah, these are looking good. Anyway, I lied. I'm going to do a couple of software names. Bear with me here. VERX right there at that $40, 5-cent buy point, blasted through that standard buy point today. So that one looks good. Broke out of that, if you will, a Darvis box of consolidation. So, Darvis traded from overseas, so he'd get the reports and say, hey, this one, popped that much above the prior high of $40.05. So he would buy that right there. So that was just his style. All right. ZETA, if you haven't read Darvis, you should read Darvis. This is just a super strong stock for good reason. I mean, it's been delivering the goods, right? I mean, it's got the accelerating sales and growth, earnings growth, pull back to the 10. No pop today, just kind of, wedging here. I'm looking for it to trade above 30 with some volume. The volume's been kind of light, but if we look at this on the weekly chart, yeah, there's your consolidation, your breakout. Like I say, there's when Darvis would buy it, and he's got a winning trade here. Tough to buy it, up near all-time highs, but I'd say a bounce off the 10, break out of that little wedge pattern. I think that's an add-on. All right, last one, APP. If you're going to own software, if you're going to own, I want you to own leaders. I want to own leaders in groups. I want to own a utility. I want to own Vistra. If I want to own software, I want to own AppLovin. I want to own a drug stock. I want to own ADMA, that kind of thing. I want to own the leaders in groups. And this one's certainly a leader, broke out, and now it's kind of forming this little shelf pattern as the moving averages catch up, just hovering around 130. The other day it broke above here and then pulled back 133.05. So once it gets above 133.05, that'd be another add-on. So it's just allowing the moving averages to catch up. Anyway, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, my favorite CEO of all time. Homestead high grad, 1974, I believe, 73, 74. I don't know. Long time ago. I want to take a look at Levi's. They've reported earnings tonight, down 8%. I didn't really read the report, or I'll have more in the morning for you. I didn't see stock charts, but definitely pulled back to a moving average and looking for the pop. And it doesn't look like it's going to get it. Might pull back to the 21. Where is it? 1924. Oops. Okay. Might pull back to the 50. Depending, after hours, you can't really put too much weight on it, which is what, 1908. So maybe it will pull back to its 50 tomorrow and find support. It's a rising 50. So we'll have to wait and see for Levi. Like I said, I didn't hear the report or read it. I'll have more information in the morning. Definitely today it pulled back with volume, so maybe somebody knew something about the report. But man, when we were kids, you had to have the 501s, and these are different times. Obviously, the standard buy point is 24.34, and it's got a lot of work to do to get there. Anyway, that's it for me at MC Stock Charts. We're gonna, have to have a balance in the Nasdaq here soon. We're gonna have to have a little chat here with the index. I know we got non-farm payrolls on Friday, but I think, Fed's already kind of decided what they're going to do. So the inflation data, the jobs data is kind of moot at this point. And if you just take a look, bigger picture, it ran up, off the lows, made nice gains, now digesting the gains, pulling back to the 21, and that's all that it's done. So it either needs to pop higher or, sell off and slice the moving averages and trade lower. But I don't think it's going to continue doing this for too much longer. Like I said, it was down 280 points on Tuesday. We only got 14 back today. So I'm looking to get half of that back tomorrow. Anyway, thank you for watching at mcstockcharts.com. We never give up. You better not give up either. Thank you for watching.